This conference will now be recorded.
So today we're going to look at, as we've been doing for the last few days, looking ultimately at our objective of whether we need to borrow any money. So what we're trying to do is to go through this, go to all of the receipts, go to all of the expenditures, and see if we have cash available or if we have cash payments to make. If we don't have enough cash, we have to borrow. So at the end of the day, preparing this cash budget is what we're trying to do. At the same time, the cash budget is quarterly, but we also are trying to prepare an income statement and a balance sheet to show if we get this infusion of cash quarterly, then this is what the income statement and balance sheet will look like. And that's what we're trying to prepare for the banker. Our cash budget showing when we need to borrow money, and then financial statements at the end of the period for our balance. And we'll have a direct cost to income statement where we're going to look at sales, less variable expenses, contribution margin, less fixed expenses, net income, showing, of course, that we broke even, and then a basic balance sheet, what are our assets and what are our liabilities. So that's the end goal of what we're trying to do. So now let's look at how we're going to get to that end goal. And we got a first step. And what is our first step? So what's the first thing that we got to do? If we look at the problem, we got this in-class problem that we've been working on. These are the assumptions on the in-class problem. Let's look at some of the assumptions. We got quarterly sales that are going to be collected 10, 20, 30, and 40. We have a selling price we've been given. We collect 40% in the month of sale, 50% in the month after sale. And so we said that the bad debts were going to be how much? If we're collecting 40 and 50, then the bad debts is 10%.
10%.
10%. Then we said that, so we collect 40 in the month of sale, 50% in the month after sale. We got a desired ending inventory of finished goods of 50%. We hadn't hit there yet. We're just talking about it. Then we find that it takes raw materials, 5 ink cartridges, 10 each, paper, 7 reams of paper, $7 each. And we paying for this paper 75% in the month of purchase, a quarter purchase, 25% after that. Our direct labor is 20 books per hour, and we pay the workers $20 an hour. Manufacturing overhead is $25,000 a quarter, includes $10,000 in depreciation. Selling expenses, 30% paid quarterly. Administrative expenses, $50,000 quarterly with $10,000 in depreciation in it. Our initial cash investment is $200,000. So to a certain extent, this is how we start the problem in its simplest. We need to make a journal entry for our initial investment. We're going to be required to keep $100,000 in the bank all the time. Then we have some equipment purchase, interest and principal. So that looks like a lot of assumptions, but let's just break it down. So let's say the first thing we're going to do is to record this initial investment. Okay. So what I've done is I have done it with closing interest. I've just put these entries across from the particular charts. And so hopefully there's no problem with making this journal entry by anyone, debiting cash and crediting common stock. So why don't we say that's the first thing we're going to do? Can everybody do that? Is there anybody can't make this journal entry? Okay, the second thing that we do is we've got to find out, okay, if we're breaking even. So we're doing the break even year. What quantity do we need to break even? So that's our next step. Now, what's this formula to calculate break even again?
It is FC divided by CM.
FC divided by CM. So we're on a unit basis for the and we're on a total dollar cost for the fixed cost. So what we want to do is to plug in these items that we need to get to the contribution margin. Now, all problems, and similar to you, on a unit basis, we need to come up with the selling price. Then we need to come up with the variable costs. This is all on a unit basis. And the variable costs are always going to be ink, paper, labor, bad debt, and selling expense. These are always in the problems we're working in and what you're working with. These are always the variable costs. So you know what they are, you just got to pull them out and put them in. Once we get a total variable cost, we'll subtract that from the selling price to get the contribution margin. So is that clear for everyone? So let's do that then. So let's go to our assumptions and put those amounts in. So we want selling price first in our assumptions. And so it tells us that our selling price is what? What is our selling?
500.
Okay. So selling price is $500. Now we need, that's each unit. Now we need the unit ink, paper, labor, bad debt, and selling expense. We go to the ink. What do we have? 5 ink cartridges at $10 each. So how much is the ink?
50.
The paper, 7 reams at $7 each. How much is the paper?
49.
Not.
49. Labor. We make 20 books an hour. Our hourly rate is $20. So what's our unit rate for labor?
1.
1. Our bad debts, we said, are 10% of sales, of the selling price. So the bad debt, this is 20, whatever it is, we multiply that times the selling price, get our unit bad debt. So what's the bad debt going to be?
50.
50.
And finally, we need to come up with our selling expense. And we're saying we're paying 30% of selling price quarterly for selling expenses. So we simply are going to take 30% of what?
500.
100.
Selling price.
Get 150.
And so the total variable cost of what?
Cost is going to be, should be 300.
300.
And the contribution margin is what?
200, sorry.
100.
How we get 200?
Yes, sir.
How do we get?
Oh, how do we get 200? You subtract the selling price by the variable cost.
Are there any questions from anyone on getting to this point? Dominique, you see that?
Dominic,
Yes, sir.
So all we did was to come up with our selling price on a unit basis, all of these on a unit basis, then our variable cost on a unit basis. And so we subtract selling price, or reduce it by the variable cost to get the contribution margin. And we said the contribution margin was what?
200.
And it tells us what? How much each unit is contributing toward the fixed cost. See, every time we sell an item, we make $200. So the next thing the $200 got to do is to cover the fixed cost. And we want enough quantity so that we in the break even, that we can at least break even. Now let's get our fixed costs. Our fixed costs are always going to be manufacturing overhead, administrative expense, and interest expense for the year. Administrative and interest expense for the year. The manufacturing overhead is how much quarterly?
35,000.
So how much is it for the year?
100,000.
Then we want to go to the administrative expense. It is how much quarterly?
50,000.
So how much is it for the year?
200,000.
And finally, our interest expense. How much is it quarterly?
25,000.
So how much is it for the year? Am I on the right lines now?
No, from the beginning you missed it. From
Oh, why
fiscal,
you just let me look bad. I thought you were my friend. And this needs to be 100,000. I need to take this one out, delete, and I'll center all these. They'll look a little bit better. Okay, so when I add up my total fixed costs, how much do I have?
that's 400,000.
So at this point, we have fixed costs of 400,000. Does everybody see how we got 400,000? The fixed costs are always going to be manufacturing overhead, administrative expense, and interest expense for the entire year. Does everyone see the 400,000? Anybody don't see the 400,000? So Dominique, what's our quantity we're gonna need to sell to break even now?
2,000.
I don't know.
Let me have. We're gonna take
2,000.
the 400,000
Divided by the contribution rate.
divided by the contribution margin 200 is, well, I'll just put the 200 down here. Okay. So we take the 400,000 divided by 200. So what quantity is the formula telling us that we need to break even?
2,000.
Any question on that, Dominique?
No, sir.
Okay, so that's 1/3 the passing rate on the final.
Just because I'm doing it right now don't mean I'm gonna remember for the final. I'm just being honest.
All right.
This is
Now,
my first time ever doing this.
when we make this calculation of 2,000, we want to do a quick check to see if the 2,000 is going to produce 0 here. We always are going to do a quick check to make sure we didn't make any simple mistake. So how are we going to calculate? How are we going to check that?
Put in the formula. I don't know.
We're going to come through and do this. If 2,000 are sold at a selling price of 500, what would the sales be?
You said
What
2,000 times 500.
Million.
that would be a million. Then our variable costs, they're 300. We aren't going to do them individually. We're just going to take the 300 and multiply that times the 2,000. So 2,000 is the that's what we're working with. So we multiply the 2,000 times the 300 variable costs. How much do we come up with?
600,000.
And if we subtract 600 from a million, what's our dollar contribution margin on break even?
400,000.
What's our fixed cost?
400,000.
And so that gives us a net income of 0. So when you calculate your quantity, then you come through here and extend that quantity. So we multiply 2,000 times 500. Then we multiply 2,000 times 300. To get our sales and variable costs. Get a dollar contribution margin of 400. Then we subtract out the fixed costs to get 0. Are there any questions? Any questions? Can everybody make this calculation? Knowing that the ink, the paper, the labor, the bad debt, and selling expenses are always going to be the variable costs. And manufacturing overhead, administrative, and interest expense are always going to be the fixed costs for the entire year. So up here, all of these are on a unit basis. All of these are total dollar amount. So the first thing we do, we made the journal entry to record our initial contribution of 200,000. Then the second thing we did was to calculate what quantity we needed to produce to break even. Are there any questions from anyone on how we get to the point we are now? Can everyone do it? Everybody's going to pass a quiz at the end of the class today. Sounds good to me. Okay. Once we get to 2,000, we put it here, while sales quantity. So now we're ready to begin the process to show if we sell 2,000, how much cash we're going to get each quarter. How much cash we're going to get each quarter. Now in the first quarter, what percentage of the units do we sell? Based on the assumptions.
10.
So we look at, so this, you got these up here. So in the first quarter, we sell 10%. How much do we sell in the second quarter?
20%.
How much do we sell in the third quarter?
30%.
And how much do we sell in the fourth quarter?
40.
And so that's going to get us a total of 100%. And I think I need this 2,000 here. Okay. Any questions on where we are now? We took the 2,000, then we put the percentage in. So how many of the 2,000 are going to be sold in the first quarter? How many of the 2,000 are going to be sold in the first quarter?
200,
200.
I think.
200. How many are going to be sold in the second quarter?
400.
How many in the third quarter?
600.
How many in the fourth quarter?
800.
And does this equal 2,000?
Yep.
So we're selling 200 for it. So we see the problem now, why we may have an issue. If most of the books, just like for most of the companies that are operating now, trying to see if they're going to survive, most companies, everything's based on the fourth quarter, a third and fourth quarter. But they can't get there if they don't have a loan reserve available. If they need it, they'll be shut down. Now, selling price is how much?
500.
$500. So every quarter, see if this will pace. We selling the unit at $500. So what's total sales going to be in year one? Quarter one, excuse me.
100,000.
What are the sales going to be in quarter two?
200,000.
200,000.
What are the sales going to be in quarter three?
300,000.
And what are the sales going to be in quarter four?
400,000.
I'll take your word for it. And we said to simplify things, we will make all of these sales credit sales. And of course, our total sales are how much? What are the total sales? Can y'all add up? 1 plus 2 plus 3 plus 4?
1 million.
1 million.
Where else do you see a million on this sheet on here today? Where else do you see a million at?
On the break even.
You were doing your
That's-
test, you had a million.
Mhm.
Okay. Let's see. So that JE means that eventually we'll come in here and we'll make a journal entry. We won't worry about it right now. Okay. Any question on where we are now? Can everybody get to this point where we calculated the 2,000, then we brought the 2,000 and allocated the quantity that's going to be sold each quarter. Then we multiplied the selling by the selling price to see what our sales are going to be each quarter. Every company in America and all around the world does this to see what their sales are going to be by quarter. The bad debts we say are going to be what? What percentage of the people were not going to pay us? And we said 10%.
10%.
So if it's 100,000, we're going to have what? 10,000 not paid. If it's 200,000, what? 20,000 not paid. If it's 300,000, 30,000 not paid. And if it's 400,000, what? 40,000 not paid. So we see already that we got kind of a problem because what? Everybody doesn't pay. Everybody does not pay. So what's the total amount for the other people not paying us? How much is going to be in this next block?
100,000.
100,000. Okay. Any questions so far? And you see JE, so eventually we're going to make some journal entries related to this. Now, our assumptions that we collect 40% in the month of sale and 50% the first month after sale. So that's the only little change in here. So when we sell 100,000, how much of this 100,000 we collecting?
40,000.
40,000.
40,000. We getting 40%. When are we gonna get the other 50%?
Quarter 2.
Quarter 2. So when we sell for 100,000, 10,000 we never gonna get. 40,000 we get in the first quarter sale, then 50,000 we get the next quarter. So all we're collecting now, even though we sold 100,000, we're only collecting 40,000 in the first quarter. Only collecting 40,000 in the first quarter. For the second quarter, sales were 200, bad 200, but we're going to collect 40% of these. So that's going to be how much?
80,000.
80,000. So what our total collection is going to be in the second quarter? 80 on the current ones, 50 from the first quarter.
130,000.
130,000. All right, Dominique, tell me how much think we're gonna collect in the third quarter. Tell me how much we're gonna collect in the third quarter. And everybody else should be calculating that too. Just don't want to watch me write it down. How much we gonna calculate in the third quarter? I mean, collect. Our sales were 300,000. So how much of that we gonna collect?
Um,
40% month of sale. So that's gonna be 120,000. Then we're gonna get what? 50% of the prior quarter. So that's gonna be what? 100,000.
60,000. Wait,
100,000. We getting 50% of 200. So how much
so
do we
my
in that third quarter?
220,000.
All right, do the fourth quarter now. So let's everybody take about 2 minutes and everybody work on the fourth quarter and tell me, just looking at this data here, tell me how much is going to be collected in quarter four. How much is collected in quarter four?
160.
How'd you get 160? How did you get 160? That's how you got it. We sold 400. So how much of the 400 we gonna collect in that quarter?
The 40% of the
40%.
400. 160. 40% times
So
the
Mendez, you
400.
gonna forget about these sales? Not worry about these?
No.
You're just gonna let that go, huh?
What you mean?
You said 160.
Yes, sir.
And then 150 underneath, right?
Correct, because you had 300 and you only had collected 40%. So you're getting it later.
Right.
So it should be 150.
Okay.
So what's our total sales gonna be?
700.
I mean collections, excuse me.
700,000.
310,000.
Oh, right there. Yeah.
310.
150 is how much?
310.
310.
So how much did you collect?
700,000. Jesus.
So the total collections are what?
700,000.
How much?
700,000.
Okay, 700,000. So you begin to see why we could have some issues if the sales were $1 million, but we only collected 700,000. So what are we going to do with these numbers? What are we going to do with these numbers? I doubt if they're going to go with me, but I'm going to copy. Where am I going to paste them at? I'm going to try to paste them at. I'm going to come to the cash budget. And they paste it. And then we know we started the company off with what? 200,000, right? And so I need to put 200,000 in here. So how much cash am I going to have available in the first quarter?
160,000.
So if you have 200 and you got another 40, you're going to have 160 in the bank.
No, 240,000.
You're going to have 240,000. You have in that first quarter the 200 that you originally put in the company and the 40 that you collected. So you got 240,000. Are there any questions? So all we did was, this is what we originally started the company on. Then all those collections by quarter, we put them in collections. And so we got 240 available the first quarter. So we simply moved the collections. We simply moved the collections down to the cash budget. Let's see if we can finish making our journal entries we got to make to get our financial statements done. The sales were all those credit. So I think this should probably be accounts receivable. And the accounts receivable were $1 million. And then this should be sales. And that was $1 million. Then we're gonna go and do our bad debt expense. We got 100,000 there, so we just make this journal entry. So from the total columns, you're getting the amounts that go in these journal entries. Then we say we collected how much? 700,000. So does everyone see those journal entries? The journal entries will stay like this all the time. You just got to get the amounts off these lines and put in there. Now we know that when we sell goods, we also have to debit COGS and credit finished goods. We don't have any raw materials or work in process left. We're using it all. But in finished goods, and what we said we're going to do is to take the 2,000 that we sold and we were going to multiply that 2,000 times what? Our product variable cost. So the total variable cost is 300, but the product costs are ink, paper, and labor. Ink, paper, and labor. So that's what we're going to use in this journal entry, the 100. And so what's going to be our cost of goods sold on those items we sold? What are we gonna debit cards for?
200,000.
Mm-hmm. So we're debiting cards for 200,000 and crediting finished goods for 200,000. So the sheets typically show you where the journal entries are, and you get them off the totals. So that's why they're listed there. And you got these journal entries in the handout that we'll be working on. Are there any questions so far? So we made the journal entry to start the company. We calculated the quantity needed to break even, proved it, then we brought that in here as a quantity to be sold. We broke it down by quarter, how much is selling each quarter, based on our predetermined collection percentages, which we'd have a history of. Selling price was 500. So the sales were 100, 200, 300, 400, $1 million for the whole year. And we made them all credit sales, but we don't collect them all in that year. So companies are selling things, but they're not collecting everything. Now, you have some companies say you can take 3 years to pay us or 2 years to pay us. So you see those ads all the time, right? So you better believe that they got a line of credit to cover those sales, because they're making the sale, delivering the goods, but they're not getting the cash in to pay their bills. So we know now that we have in our cash budget beginning cash of 200, collections of 400, a cash available of 240. So how much are our expenses going to be? So we can see if we need to borrow money. So right now we're going to start at the bottom and move up. So we're going to start at the bottom and move up. And y'all can tell me how long it takes to do this. So at the very bottom, we have this equipment we purchased for $1 million with a long-term note. So we're going to have $1 million here. And we're going to have a long-term note of $1 million. Then we pay 25,000 interest and 100,000 principal. So 100,000 principal, and we pay 25,000 interest. And in fact, we pay this every quarter. Those are fixed costs. We pay them every quarter. Okay. So now this is not a cash item because we used the note. So we're going to go down. So what we've done, we just simply say, okay, we paid 100,000 on the note quarterly. Was it 100,000 or 10,000? No, it was 100,000 principal. And we paying 25,000 interest. So already we see we're gonna be in trouble, right? In the first quarter. So all we did was go to the schedule and say that the expenditures were, what my journal entries are, what column am I in for journal entries? M. So we in M, so when we buy the equipment, we would debit equipment and we would credit note payable for $1 million. But because it does not involve cash, it's not going on the cash budget, but we making this entry. So I skipped a line there. So when we total these up, the total principal payments are going to be how much? 400,000. So let me see, click in here. And the total interest payments so now we're going to make that entry that we make when we pay principal and interest. So what's this journal entry going to be?
Account payable?
Well, let's say note payable. So I got a note payable for the 400,000. What else are we going to have? Maybe interest expense.
Yes. First.
For how much?
Um,
And we're going to credit cash for what?
500? 500,000?
500. And I need to put these here, 400 and 100. So with that little calculation, we have determined on the cash budget how much we're going to have for long-term note and interest expense. So moving from the bottom up, let's go to administrative expenses. How much are administrative expenses quarterly?
50,000?
So we're paying 50,000 each quarter. But we've got depreciation in there of how much?
10,000?
10,000 each quarter. So depreciation is not a cash item. So even though your expense is 50, you're only going to have to lay out 40. And so you don't borrow the full amount, you're only borrowing the interest. So we simply subtract these out. So the only cash is going to be 40,000. Okay, So our total expense is what? It's 200,000. But because the interest was 40,000, and because you're paying interest, you're not going to go out there and borrow what you don't need and sell. And so the total amount that we got to pay is what, 160? So for administrative expenses, we can now copy these. And paste them in. And total for a long-term note would have been 400,000. Would have been 100,000. Now, manufacturing, we're going to jump to manufacturing overhead. It works the same way. So I want you all to put in how much cash we're going to have to outlay for manufacturing overhead. So you all go ahead and begin to fill in the next part of the chart. We already got the administrative, the long-term principal payments and the interest. So I want you all to put manufacturing overhead on here. Tell me how much you're going to have to pay for the manufacturing overhead every quarter as you're determining
Professor, can I see the equipment journal entries again real quick, please?
what you want to see. Here.
The journal entries over
Oh,
for the equipment. Right there. Yeah, that right there.
off the equipment, then we paid the interest and principal.
Okay.
On administrative expense, our entry would be we would debit the administrative expense. And the debit would be for 200,000. We're going to credit accumulate depreciation for how much? 40,000.
40,000. Okay, 40,000.
And the cash is going to be how much? 160.
Professor,
Yes.
I know you were saying we got a quiz later in the class.
No, I'm just talking, Star here. I'm just talking.
I was about to say, because right now I'm on the way home. I was going to see if I could just turn it in late. But okay, appreciate you, bro.
All right. So I want you all to do everything with manufacturing overhead, which operates the same way that I did with the selling expense, including making those journal entries.
When the class is over, do you mind putting this that you just did on Blackboard for me so that I can look over it? Because
Okay.
I'm still a little lost, honestly. I mean, I'm going to meet with my group and they're going to help me, but if you could post this, that'd be nice.
Well, I'll do that. But a key thing is breaking this down in the parts. You know, you say, I'm doing this, then I'm doing this, then I'm doing that. But what we're trying to do is determine, do we have enough money to pay our bills in the first quarter? that's not looking so well. So have you all worked on manufacturing overhead? Do we have the manufacturing overhead?
I got 60,000 for the total.
Paste in here.
I got the same.
Okay, so you'd have put these 25,000s in, then you'd have put in the 10,000 for the depreciation. So for the depreciation, you only had to pay out what? 15,000 a quarter. I mean, the other is, would be accumulated depreciation, which would not be a cash expenditure. So 15,000. Does someone say 60,000?
Yes, sir. 6,000.
Make my journal entries.
All the way down your line today.
We did 100,000 depreciation expense. I mean, equipment.
Oh,
Oh, baby. Oh, baby.
100,000, right? The depreciation was how much?
40,000.
Yeah,
40,000.
40,000.
So how much did we have to pay? We said that was what? 60,000.
60,000.
Okay. So let's just put these on the budget then first. Let me put 15. So let's see if these will copy to the cash budget. So what we're trying to do is to go through these schedules and see so that's in there. Did y'all make a journal entry? Now, what I will tell you is that you got the journal entries in this document. Every journal entry you made is in this document. So it says, well, we debit what? On manufacturing overhead. What do we debit?
100,000
For what account?
for manufacturing overhead.
And we credit what?
Cash for 60.
So the key thing is that whenever you work on a schedule, the journal entries that you got to make are right. They're already set in stone for you. So we would be debiting MOH and we'd be crediting cash, and we'd be crediting accumulated depreciation. And what's the debit to MOH going to be?
100,000.
100,000. What's the credit to cash going to be?
60,000.
And what's the credit to accumulated depreciation going to be?
40,000.
So now, did we get this manufacturing overhead put on our cash budget? Manufacturing got that in there. Let's do selling expenses next. So the selling expenses are a percentage of the sales, correct? So why don't I put total sales? Why don't I go up here to the sales schedule and copy these sales in dollar amounts? So here's our 100, 200, 330, whatever. What is our rate that we paying? What rate do we pay? What's our commission rate for sales, for selling expenses in your assumptions?
You're talking about the 20, 30, oh,
Selling
40%.
expenses paid how much quarterly?
30%?
30%.
Okay.
30%. Okay, so how much we paying for commission in quarter one? If your sales were 100,000 and your commission rate was 30%, what would you want?
30,000?
30,000. The next quarter, want 60,000.
2,000?
Next quarter,
90,000?
and the final quarter,
120,000?
and so the total sales, how much would this number be?
60, 90, 180. 300,000?
Thank you. So now we see what our selling expenses are that we got to pay quarterly and in total. So we're going to copy them and see if we can put them in here. There they are. Are there any questions on manufacturing expense down to interest expense as we're laying out our cash outlays? Okay, so here, now we have to work with a little thought process to get the ink, the paper, and the labor. And we'll come back, we're gonna do labor first. We gotta see how many we're gonna produce each quarter. So if we're going to sell 200, 400, 600, 800. You can't sell them unless you produce them. So the first line in the production budget is the sales quantity line from the sales budget. So we just bring that on down. Now, when you walk into a store, making books, everything, you don't go into a store, a bookstore, shoe store that don't have anything. They need some inventory. And so we said that we wanted 50% of next month's sales on hand all the time. That's what we wanted. So at the start of the month, we'd have something to sell. So if we produce 200, we also want 50% of this 400. So we're going to produce those too. So we're producing what we're selling plus half of next month's sales. We want that there. So the total we're going to have to produce is 400. We don't have any beginning inventory. So in the first quarter, we're going to produce 400. Now let's go to the second quarter. We're selling 400. So we got to make 400. But then we got to have 50% of these available. So the total need is 700. Well, we already had 200 in the inventory. So we just bring that 200 over. So we only got to produce 500 in quarter two. Quarter three, do you think you can calculate how many we got to produce in quarter three? So based on what we're saying, Mendez, how many we got to produce in quarter three?
400.
Well, we're selling 600, Mendez. Then we got to have what, 50% of these, right? 400. So that means that we need 1,000.
Yes.
Our beginning inventory was what?
300.
300. So we're making 700 in quarter three. Now let's go to the fourth quarter. Let's go to the fourth quarter. So what we're going to do here, Rodney, we got 800, but we need 50% of the first quarter of the next year. So let's go up here. Our next year is $1 million, right? We're going to make $1 million. Okay. So what's my quantity?
Is that $1 million or 41 million?
I think this is $1 million. Target profit should be $1 million.
Okay.
So let me put TP. Because that's what, that's what you're working on, $1 million.
Okay.
So if your target profit was $1 million, what's going to be in this box in the next year?
50,000.
How'd you calculate it? Tell me your formula.
Don't ask me. I just guessed.
You guessing. Didn't I tell you, Mendez, to memorize those formulas? See, you as well as everybody else, I told you all to memorize those formulas. So what's the quantity in here going to be?
You have the Peace Corps plus.
Say what?
The Peace Corps plus the total profit and divided by the CF. That should be like 7,000.
So we're going to need.
So 400,000 plus
$1 million, right?
Right.
That's 1,400,000.
Yeah.
So we're going to need then $1.4 million in terms of, if we look at it from a fixed cost basis. We gotta
7,000.
have enough books for to get to $1.4 million. Did I get down here too far? I don't mean that to be here. Right here, this number becomes $1.4 million. We just simply add whatever profit we want to the fixed cost. So what's this quantity gonna be?
7,000.
7,000. Yes.
7,000. So to make $1 million, and I'll let you all prove this later, in your spare time later tonight, but it takes, in our second year, we're gonna be selling 7,000 units. Okay, so we're gonna be selling 7,000. But for this production budget, what we gotta know is Q1 of the second year. So what's gonna be the number here in Q1 of the second year? We say we need 7,000.
Yes.
7,000. So how many of those 7,000 are gonna be sold in Q1?
Um, 700.
700. So when we get over here to the second year, the number for sales in the first quarter is going to be 700. So we need 50% of the 700, or 350. Because we expanding, we can't just have a few there now. We're growing. So that's 350. So 800 and 350 is what? 1,150.
Yes.
And we already had how many? 400. So how many do we need to be produced in the fourth quarter?
750.
Take your word, 750. So we knew we needed the next quarter, but when we get to the fourth quarter, we got to be focused on the first quarter of year 2. Now watch this, the units to be produced, 400, 500, 700, 750. I'm gonna copy it. I'm gonna put that on raw materials, ink. I'm gonna put it on raw materials, paper. And I'm gonna put it on the direct labor budget. So once I come up with how many I gotta make, and it'll be a good thing since it's going on 3 budget to have it right. And since first thing on here are the sales, it's gonna be a good thing to have this number right. So that's why you double check this number, because you're gonna miss a whole lot of things if you're not there. But we're there now, so let's just see if we can work on this direct labor budget. So what's our per unit requirement? Boy. We're making 20 books an hour, right? So the per unit requirement is always 20. But how many hours is it gonna take us? We got to make 400. We can make 20 an hour. How many hours do the workers need to work?
Is that 8,000?
So let me get this right, Rodney. You're paying people $20 an hour. They're gonna make 400 items, and you're gonna pay them $8,000.
No, the labor hours.
No, I'm not.
How many hours are they gonna work?
Per unit. Working.
If they're supposed to make 400 items and they got 20, they make 20 in an hour. How many hours does it take to make those 20? If they can make 20 in an hour.
20?
20.
Yeah,
20?
about 20. What about if they got to make 500? How many hours is it going to be?
25?
5.
They got to make 700.
35.
35?
They got to make 750.
37.5.
How much?
37.5. That's 38.
Hey, Prof.
Yes.
We're going outside. I gotta go.
Okay.
Have a good night.
What's our labor rate?
Okay.
20?
Paying them 40 an hour, right?
Right.
So how much you gonna pay the workers in the first quarter?
40, 40, 40, 40.
They're gonna work 20 hours. You're paying them $40 an hour. How much you gonna pay them?
800.
800. How much you gonna pay them in the second quarter? Is that about 1,000? If you work 40 hours at 25, if you work 25 hours at $40 an hour, how much money do you want?
It's 1,000.
1,000. And how much do we, in this next scenario, where they're working 35 hours, how much we gonna pay them?
1,400.
And in this final situation,
1,500.
so we now have determined how much the direct labor is gonna be. So we're gonna copy it. And where we're gonna take it to? Where is this supposed to be? That's 4,700. So in here, it's gonna be a journal entry based on 4,700. What do you think that journal entry is gonna be?
Direct, wages payable or wages expense?
We're gonna actually debit finished goods, and we're gonna credit cash. So we're just moving it all the way through. We aren't having anything in work in process, so everything is in finished goods. So here you have another journal entry. Once again, those journal entries are in there. Okay, so let's go to ink. I'm gonna do ink, then you all gonna have to do paper.
Oh,
What's our per unit requirement on the ink? takes 5 ink cartridges, right?
right.
So we're gonna put 5 here, 5 here, 5 here, and 5 here. So how many ink cartridges we gotta buy? Is this 2,000?
2,000,
2,500?
500, 3,500.
And
3750.
so based on what you're producing, this becomes the number of ink cartridges that you got to buy. What's our unit cost of ink cartridges?
$10.
Okay, they're $10 each. 10, 10, 10, 10. So that's the unit cost. So the total cost then is what? 2,000, then 2,500, then 3,500, and then 3,750. Correct?
How come?
Is that correct?
I'm not sure. How did you get that, sir?
I just multiplied $10 times each one of these.
Oh, then that's 20,000, 25,000.
Is it 20,000? Excuse me,
Yeah.
thank you. 20, I left off the zero. So 20,000. This is 25,000, right?
Yes, sir.
And this is 35,000. And this is 37,500, correct?
Correct.
Okay. Now the change we have to make, similar to what we were doing before, it says that we pay, and this should be 75% in the month of purchase. So whenever we buy something, we pay 75% in that month, that quarter. Should be quarter. Then we pay 25% the quarter after. So after we purchase these items. So what that means is that, as you can imagine, if our cost is 20,000, we only paying how much in the quarter purchase?
15,000.
15,000. How do I get over here? So in the first quarter, even though we bought 20,000, we only paying 15,000. But we know what? that next quarter we're gonna have to do what? Pay that 5,000. Plus, if we bought 25,000 more, we got to do what? Pay what?
18,750.
18,750.
Mm-hmm.
So our total is what? 23,750.
Yes.
Yes, sir.
Then this next quarter, we're paying how much? $75% of 35,000 is how much?
26,250.
And how much we got to pay for that prior quarter?
6,250.
So the total payment,
32,500. 32,500.
it's fine to me. Then in the final quarter, we got to pay what? 75% of 37,500. How much is that?
$28,125.
Then we got to pay the rest of that last quarter. So how much is that?
$8,750.
So our total payment will be what?
$36,750.
36,750.
I got 36,875.
Six,
That's
eight.
So what are the total payments that we're making on the ink? We add all of these up, how much is it?
93,125.
How much?
93,125.
93.
Oh, sorry. I missed one. Sorry.
I got 86,725. I could do it over. Let me try again.
I know what I can do.
Okay, I got 108,125.
That's it, 108,125.
Right.
And I was just trying not to
That's correct.
put a formula in, because when I tried to copy it, so now for the raw materials ink, we paste that in. That's what we have. Now, if you were making the journal entries, when you buy the raw materials, what you gonna debit? Well, we're kind of putting everything in finished goods, so we'll debit finished goods. And we'll credit accounts payable. So that's when we buy it. I was putting that over, son. So that's 37,500. So of course I want you all to do the paper, but we're gonna do this first quarter with the paper. so that we can finish the first quarter of the cash budget. So our per unit requirement on paper was what?
Paper. Where are you?
7 reams.
7.
So we need 7 reams for the paper. So 7 times 400 is what? 2,800. At 2,800.
Correct.
What's our unit cost for the paper?
I think it was 14.
Paper, $7.
$7.
Cost. So we're gonna multiply 7 times 2,800. So what's our total unit cost gonna be for the paper?
19,600.
I have a question. Where did you get the per unit requirement from again?
In the assumptions, 7 reams per book.
Oh, I see it. Okay, cool. Thank you.
So how much we paying in the month of purchase? 75%, correct?
Yes, sir.
So how much is that gonna be?
15,700. I think.
15,700.
14.
Oh,
14.
14,700.
Okay, so the 14,000 is all we're paying in the first quarter. 14,700. So what I'm gonna do is, I'm gonna let you all finish it up. But now I have everything in here. 14,700. I have all my expenditures. So if I add up all of these expenditures, what am I gonna end up with as a total expenditure? I'll tell something. 240,500. Does everyone see that? I simply added up. I had cash available 240.
Okay.
But my payments are 240,500. So what is that? I'm short how much?
500.
So I'm short 500. How much do I have to borrow?
You're short.
Say what? I don't know that one.
That's 500.
So I'm short $500. So I need a short-term loan, right?
Yes, sir.
But I know that this number has to be 100,000. I'm keeping it at 100,000. So how much do I have to borrow?
100,000. Well, 105,000 or whatever. You know, oh my gosh, $100,500. I don't know. My brain's not working right now.
Oh, not worth it, but okay.
Hey, but you knew what I was trying to say, though. That's all that matters.
I mean, I got it on the wrong line.
Oh, God.
Okay. So we did all of that, and we got it in the class time to say that in the first quarter, we need to borrow 500,000 so we can be here. Now, when we go to the second quarter, not too far, our beginning cash is 100,000. So whatever is down here at the bottom becomes the beginning, not the 200. So how much do I have available in the second quarter to pay bills?
230,000.
Now, how you think we're gonna come out? We don't have the paper in here, but if I just do that without the paper, I'm already at 264. Okay. But you all's job now is to complete this chart, always having at least 100,000 here. So if you don't have 100,000, then you got to borrow something. So is that clear?
Mm-hmm.
Then just like I made these journal entries, I got all the journal entries made except the one for raw materials paper. You all gonna make that. So with all those journal entries made, Dominique,
Yes, sir.
make sure that they post them to the ledger and come up with a trial balance, which does not have many items on it. So Dominique, you can, no matter what, you let them do that, but you get this trial balance balanced. And I think I have all the accounts. If I left some out, that's fine, but I think these are all accounts you need. So once you do
Here,
that, then you do a direct costing income statement. And we know that income statement is going to start where? Sales. Everything on down is going to be on the income statement.
So,
Then you're going to do me a balance sheet and be in balance at the end. So that's you all's job for next time. Are there any
here
questions?
on
Oh, wait.
Blackboard. Can you remember to post it on Blackboard, please?
Well, I'm
And
getting old,
what
so
numbers do you-
I'll try to
Yeah.
remember.
Yeah, I know you're real old. That's the problem.
Well, the alternative to not getting old is not so good, okay?
Yes, sir.
Alternative to not getting old is not so good. How it coming, Reynoso?
Everything's good, sir. Sorry I came late. I was stuck in traffic.
Oh, stuck in traffic. Rodney, what about it?
I think it's good. I think I'm good.
Nice.
I got a question later on though for you.
Okay. So
what
y'all
you
have
guys,
class homework. Y'all just got to get this finished. That's the whole class. That's all of y'all. So you all should be able to get this finished and those financial statements done on this sample problem. So I'll move all that other stuff back. I guess we'll have to meet next week.
What?
Wait, so when is this due?
Hey, Dominic, you and Jennifer can't say anything. Y'all can't talk.
What? What do you mean?
Y'all can't
It
talk
is.
next week.
Oh my God.
And
Y'all can't
no.
talk. I gotta catch up.
Yes, but if we have class next week, I'm not gonna be able to come because we have a game.
Oh,
So
are y'all winning? Tell me that. Are y'all winning?
heck no. Lord no. We get in our behinds, whack, kick, toss, slid, every which way you can name it. Okay. We are playing teams that are not even in our division. Yeah, this ain't, yeah. Mm-mm. We don't even have a full team. We got about 5 or 6 injured people.
Mm.
Yeah. But everybody will be back for conference, so that's all that matters.
When is this
What time
due?
the game start?
At 5:30
What day?
Thursday.
Oh, God bless. Okay. No, wait. Okay, never mind.
That gives us Monday and Tuesday.
Yeah, I can meet Monday. I'm meeting with Tao on tomorrow because
Okay.
I'm still lost.
So you have to go through it, but basically we are finished now. So we're finished with a year. And if you see, it did not take us all the time in the world, about one class period. But what you've got to do now is finish raw materials paper and then finish the cash budget to see what the budgeting is like.
We have a quiz due,
So this is the quiz.
and we don't have to put it into next class period, right? Correct?
That's correct.
Okay.
So you got to get this finished. You know, I've done most of the work, but then but Dominique, so you can get these journal, and I don't care what they are, or whether you understand them or not. You know how to post journal entries and get those financial
Yeah.
statements done. Ty will also. So the only journal entry that you all are missing, okay, well, I'm missing one here. What's the journal entry here we need to make? Probably got to, wait a minute, debit accounts payable and credit what? Cash profits. Tyrell, you didn't even tell me. So when I add up the total of these,
Yes.
total here, which is 117,500. So that should be 117,500. So we need all the purchases by quarter. 7. And our payments, we said we're at 108. So you all got to make these same two journal entries down here for paper. So somewhere down here, you got to make these same two journal entries. You all got to put the amounts in. With those put in, you're going to post them to a ledger. I won't worry about, but you can handle that. Then I want to see a balance, trial balance. I want to see a net income. And what's this net income going to be when y'all give it to me? What's net income going to be?
$1 million.
No. What's this net income going to be?
0?
0.
0.
Break even.
Supposed to break
So
even.
this is the break even year. So you know you got everything right when you come over here and you post. And this is 0. If it's not 0, then you know something wrong. And the cash here and the cash here will need to agree with whatever's in here. I better put some X's in here in red. I put 3 of them in here. So whatever this ending cash is here, when you get over here, that same number has to be here. And it has to be here too. Then you tie it in. So so these are your checkpoints. Cash on your financial statement tied to cash on the cash budget. and this net income is 0. So once you get that done, then you'll be ready to work on your project and do the same thing. So what we've done today, and when you finish this up, that's what you got to do on your project. And you'll be done.
So I have a serious question, and it's just in all seriousness, right? Seeing that we only have one class left before finals, right? Why can't our project be our final? Or why can't we just have a final? Why do we have to finish the project and do a final? I'm just asking because that's a lot in only a few days. It's like this is literally the last week of school. And honestly, you can't blame us because the first month, 2 months, 3 months, you went over accounting 1. You retaught accounting 1 from beginning to end.
Did I?
So it's like we rushing everything basically. And it's like putting a lot on us at the very last minute, if that makes sense. I know it ain't a lot of work for you, but it's a lot of work for us.
You don't think it's a lot of work for me?
I'm just saying, I don't know how hard it is to make exams hard. You know, it's not assignments. But it's a lot of hard work, especially to try to meet with your group when everybody has their own schedule and their own finals to worry about also.
Oh, okay. I thought y'all were only worried about this final. I thought everybody told me to pass it, everything else. This is all
I'm sorry. No. Even if you have to focus on finals. Finals, midterms don't really matter, but your finals, they count more than anything. Like, I'm just saying, I'm speaking for the class, even though the whole class not here right now. My thoughts. You should take it under advisement, though.
What I do is when I put this in, I put in some students' projects from last semester. And they were
Yes,
online. So I put in some student projects from last semester, and we followed about the same process. But you just have to, So we review Principles 1 because if we don't review Principles 1, so all those journal entries we're making, then people have problem with those journal entries. So we have to review Principles 1. But I put a few projects in there for next time to let you all see what some other students did last semester, completely online. And then we'll talk. So Rodney, did you have anything?
It was about the project.